Okay, that's the right one. All right, good morning. These markets will not give it up. And the liquidity pump just keeps going. And as you all know, prices just ripped higher on the Fed saying, we're not doing anything to stop this train. So up, and it went. And how far can it go? Well, we just continue to track what we've been talking about all week. Does it even break a prior day's low? And one of the things we discussed, I guess a week ago and part this week, is when ranges contract or when prices close near the low of a range, it's easier to break the prior bar's low. Common sense. It doesn't have to travel as far to do it. Yet it hasn't happened and it continues to go up. So yesterday we got a bit of a range expansion bar. And so down here, range expansion bars ignite. And after a consolidation, we get a range expansion bar igniting. And as we can see, sellers stepped up, smaller tails at the top, and they gave it up. And so now range expansion bars communicate power. That's clear. And first reference point of support is at the bottom of that bar. So it takes a lot further to travel to violate that. More common sense. That's what we do here, common sense analysis. The other part of what we call the factory work or thought processes that goes along with a pattern is range expansion bars are momentum moves in smaller time frames, which create the concept of a void. What's a void? A lack of any support. And as you can see on the hourly chart, how it went right up there, there's no support underneath. Now, the next part of the process is, can it create support? What does that mean? Well, that means going sideways or coming down and pivoting. And there's no pivots on the hourly chart, but you can be sure that there is. You can see right, well, a little further. This isn't a 24-hour chart. But anyway, over here, you can see all the pivots on the 5-minute, creating that support. So now once it does that, can it stay above it? Now breaking it is just an initial intraday sign of some weakness. However, if it breaks that, it opens up the door to coming all the way back down. We don't know if that'll happen or whether it breaks it and springs right back up again. Right now, it just continues to show strength, but slowing momentum on the hourly time frame. We've got a violation of trend here on the 5-minute time frame, which could lead to lower prices, but you can see that support sitting right there, which it bounced off of directly and came right back up again. So it's caught between these two reference points on the small time frame. Now, from the daily time frame perspective, and of course the weekly time frame perspective, these trends are up and they have yet to violate a prior bar's low. How long can that go on? I don't know, until it stops. Now, with the range expansion bar and what I said about the price void, if for some reason, which we don't know, all of a sudden sellers decide to hit the bid and prices come down and we get a reversal of yesterday's bar, that is one of the things we talked about in MT Live yesterday, potent reversals. Range expansion bars are power. And if we were to get a reversal of a range expansion bar to the downside, well, that's negating that power, and that's a bearish event. So we'll see where today ends up. Right now, you see his prices are up. Prices are just chopping around here. There's nothing to stop them from going higher. We'll see how this develops. It's run a long way, so we know odds are that it is likely to, it's increasing likeliness that we're getting closer to some type of, let's call it a correction day, right? Which doesn't violate the trend, but it's a correction day. Norbert's asking me, good morning, what do you think about percentage of stocks above their 200 MA? Is it a useful to watch? It is, but it's a much longer term piece of information. I can look at it. I haven't looked at it recently, and it's well below the highs. And so what this communicates to us when we look at that information, well, that's on a 4-day. Hold on, let me look at it on a daily. I'm looking at another platform here. It's well below where it was at the end of 2000. And what it tells us is what we already know, is that this market goes up on a limited amount of stocks. It's not a broad-based rally. It's stocks like Amazon and Apple, and of course Tesla and Google and some others that are driving this market higher. It's not, let's just call it, hey, you could say it's not a healthy market, but hey, if you're long QQQ or a market index, you're like, well, who gives a damn? It's going up. But as we look at what's happening, behind or under the hood, so to speak, and we see the percentage of stocks that are still below their 200 MA, we know that there's a vast amount of stocks that are not performing. Now, of course, that can be viewed as a negative because you don't have this broad-based participation in the market going higher, and say, well, sooner or later, that's going to have an effect and the markets are going to come down. And that is a valid argument. The other side of that argument is to say, well, there's all these stocks out there that haven't performed that could play catch up. And there can be a rotation from what is stronger into the weaker, and those can participate. And we see a lot of bottoming patterns in the green room of stocks that are turning up. For example, airline stocks, cruise line stocks. And we see a lot of stocks that did well during the pandemic, the stay-at-home stocks, as they were called, that are now underperforming. So we see that bit of a rotation. So we have this information that can guide our bias, but even a negative piece of information can provide us with some positive information. So we want to balance that if we can. Sometimes it's just all out. This is not a good thing. So that's what I would suggest as to all of these stocks that are still well below. However, what you also see, Norbert, if you want to look at it, which you can look at in TC 2000, is the percentage of stocks that are now above their 40-day moving average, which is beginning to move to a bearish extreme. It's still got some room. But on a short-term basis, even those underperformers are moving up. So we all know for various reasons that there's long risk growing. And what we've talked about over the last week or two is that, look, on a most minor level and a smaller level, is to just say, hey, it hasn't broken a prior day's low. And when it does that, that's a piece of valid information that says this hasn't happened recently, and there's some type of corrective process has begun, and then we'll just see how far it goes. All right, S&Ps, same story. They're moving up. We talked about this 4650 level yesterday. It got up to it. It stopped. It's above there today. We'll see if this gap up turns into a gap and crap. So far, it's not. It's just whipping back and forth. The Dow dipped down, no break of a prior bar's low, and we could just keep shifting that up, set an alert there. Even if you're not looking at it, you can see the void. And one of the things that you might think about these power bars and voids, it's like when you see them fall apart, it's like, why was there all this demand at that time, such enthusiastic buying, and then all of a sudden the next day it falls apart? Or for intraday traders, it could be in the next 15 minutes. And I don't have an answer. It's just something that happens, and accept it. Is that sentiment and supply and demand can shift in a very fast moment of time. Internals, I still haven't fixed this chart, the platform, but you can see sentiment, I looked at it last night, and breadth is moving up toward a bearish level. It's regained up above that 100, and you can see sentiment here. I mentioned in the room yesterday that the put call ratio was at 0.5, and I said historically, that's been a heads up warning. Now, there was news yesterday that drove the market, but this market has just been one in which it cares about nothing, because as far as risk goes, and it's going to going higher because of the liquidity. At some point, that's going to end, because how long can the Fed ignore what's going on? Well, I guess as long as Sleepy Joe and the puppet strings are pulled, tell him to do that. But of course, there's risk that's going to come home to pay for that at some point. And so as we look at this type of information and say that institutions and traders are just ignoring any risk and buying leveraged or call options to profit on the markets going higher, which they should, but at some point it gets to an extreme. And the more it gets to an extreme, the greater the probability that it's going to correct. So we know we're close. And, at how much higher can it go? And the reason we use these market internals is because we know that when it gets to too far at an extreme, it's going to happen. The only unknown is when, but it's going to happen. And the more extreme it is, the more you know that the break of a prior day's low is going to be something that is going to start that correction. Even something as minor as that, especially if it violates the low of a wide range bar. So, Steve says, stick the markets or lost even more followers. Stick the markets. Well, everybody jumps on board a trend, and there's nothing wrong with that. It's actually the right thing to do. But you need to have a plan on how to manage that. And of course, if things turn on a dime, too many, suffer from the deer in the headlights syndrome. And, when the turn comes, they think, oh, it'll be okay. It always comes back. And then when it doesn't, they lose a tremendous amount of money. Right. Russell, just finally, we've been talking about this all year. Finally, right? It breaks out, high, attempt. Finally, it breaks out, and small caps are catching up. So what does that mean to us? Well, it means that this is another example of what was unloved and the underperformers, going back to what Norman asked about under the 200 MA, these stocks now playing catch up, and more, let's say, risk is more measured on related to money management, but more speculative is a better word. The more speculative stocks are now beginning to outperform. And the takeaway from that is this is fantastic. We talked about transports, and then we talked about the Russell in the past playing catch up, and they are. But the other side of, while there's a positive, there's a negative. This is what happens near the end of a bull move, is that money flows into the more speculative stocks. Now, when does that end? Well, it ends when we see it end. We'll see a big reversal. So enjoy it while it lasts. And we'll just continue to measure what we do until it tells us that a reversal has occurred. And right now, just looking at this chart, we have to view this as, hey, this went sideways for a year and broke out. Unless something was to immediately reverse what has happened, and there's no reason for us to think that at this point that I can think of, this has implications of being able to go to significantly higher, since it's created such a base, which it has. And as long as it stays above, it shouldn't even come down here. But if it does, there'll be buyers. But if it ever breaks below here, obviously that's going to be a significant event. All right. And this transports chart has just been destroyed in a sense, and that it's unreadable. And that what happened with that with car stock, CAR, driving it up like that, and just going to take a long time for this thing to settle down. And, NDX moving up. As it starts to move straight up, if it continues to do this, moving up, more vertical it goes, the greater the probability that it's going to come in relatively hard. Dow moving up, everything, it's moving up. So we see everything participating like that. It's a positive. How far can it go? Just keep tracking prior day's lows, what we've been talking about. Turn in gold today looks encouraging. And, I know it's pretty sloppy, but breakdown, range expansion, and immediate reversal like that. Look at the move up. It's been bottoming out here on the weekly time frame. Let's see where this ends today. It's probably worth putting on a starter position in gold. And you can see wide range bar. So it's into resistance. Let's see what it does. Silver, I like the turn. I like the breakdown, like the bottoming tail bar. Right. We looked at this yesterday in MT Live. It's one of the pictures that we said, whatever you call it, frankly, we don't care. It says it's going to go up. Now, this bar isn't done yet, but should it close near the high, it dipped down and came right back up again. That's a pattern that says it's going to go up. Oil up today, a little breakdown reversal. We'll see if it holds on. And where are bonds? That's the 30-year. Just slopping around here, trying to make a bottom. And I have to see. It's the 10-year. Looks like it's bottoming out as well. It's going up, which means interest rates go down, which, is conversation go on. And like, okay, if interest rates are going to go down, and we talked about this in part, if this is going to roll over now and interest rates are going to go down, and we've got this 5-year, which has been, well, we'll see if it tops out, because if the 10-year goes down, you're going to want to see this go down. But that's usually not what happens if, well, we got no really to think this economy is going to be doing well, because, well, that's another conversation. Anyway, we'll keep an eye on these interest rates and whether those two long-term and short-term get any closer than they already are, which we discussed earlier in the week. VIX down near prior low, breaking here, it might just turn back up again. So just another reason to be careful on the long side. Things have moved up a whole heck of a lot, and there's plenty of, whether it's internals, the volatility index, the extent to which prices have moved, and so on. Keep an eye on the exit door, and money management is key. What is the MT Live on interest rates? It'd be interesting, TJ, but it'd probably be brain damage for a lot of people. But yeah, we could consider that for sure. Talking about bonds and interest rates and all of that. All yours, Dan.
Good morning. Yeah, I think it would just be a better discussion on interest rates here in the green room. Yeah, I think that's too detailed for the masses. All right, so I said sell a little Yandex here. This is a beautiful 1, 2, 3 we entered yesterday. And this is the type of new trade I want, if any, as opposed to the, the index horsemen that are vertical. All right, Thomas, did you go through those on quality? Because I got like 100 to look at. So, since we're a team here, it helps if you, try to feed the tier ones. But I mentioned in last night's video, I don't think I have ever seen a run like this post FOMC. just a, usually you get 3 wild swings, and then in my experience, you got to wait an hour the next day to kind of let things digest a little bit more. That's just a crazy bullish run yesterday. Wow. So Thomas says TKS, it's flat. It's flat. So that's not tier 1. TDoc, yeah, that's been on my list for a while. It's definitely worth watching. Yeah, Greg, we got to watch IWM for our ETF letter. Yeah, Chewy's on our list. As you know, you're in the green room. I'm looking for a buy setup on that. APA, yeah, there's a couple oils I liked. 2888, Gap's too big, but there was 1 or 2 other oils that had earnings here that I liked. Here's APA. Oh, well, that one, that's the one you just asked about. No, the Gap's too high, too big. MRO, $17, maybe 30-minute high. Diego ATVI. I mean, you just got to know that you're playing in dumpster land. Oh, Greg, talking about dumpsters. We need to do an end of the year dumpster diving session. You're dealing with garbage here. It could be bottoming and it could be a scalp. If you want to play in the dumpster, I actually think Zillow is a better one. And the reason is because it's multiple bars down, far from the 20. And look, I like the bullish pre-market gap. So I think, Diego, this is a superior dumpster day trade. You see the difference? MGM. Now see, this is a tier 1 to me. You got a bull consolidation here, small breakdown failure, rising 20, 50, 200, gapping up, coming in. This is the best looking gapper I've seen so far. I've gone through like 50 of them already. GoDaddy, I like it. Oh, there it goes. All right, go. I was hoping it wouldn't run. Darn it. I was hoping it would open right here at 72, which is right over this base. See? And then 76 would be my target. So that was another favorite of mine, but now it's ruined. Airbnb, yeah, there you go. See, that's quality. Absolutely. Airbnb. I don't even know if I have it on my list. I have over 100. I mean, today, pre or post, Austin, pre or post? Must be post. Why would you say that? I would say there's high odds of, really, I would say there's high odds of pre because of the gap. But can somebody verify that for us? Because otherwise, I mean, it still might be a day trade, but I like it. All right, let me continue here. I have so many to look at. Raul says about MSI. All right, thanks, Janet. Yeah. MSI is 1, 2, 3. I mean, it's a little bit close, a little bit higher, but it's an all-time high. So yeah, MSI looks great. As remember, I said the setup that I want for a new trade, as opposed to the vertical indexes. This is another fantastic example. If we're going to put on new trades, they better look like this, close to support in a compelling setup. So yeah, good find there. All right, so let me continue here. Hims. All right, it's gap into resistance, but it's a bullish gap. It's a bottoming pattern. It could go to $12. So let's let that kind of settle down. I'll put it on another window because I'm running, I got so many to watch. And Greg, remember Triple D the other day? That's gapping. So remember we talked about selling a put into earn. Oh, we did. We have a short $26 put on this. I think. I know I gave one in the Friday one, and then everybody got all freaked out on me that the strike was $30. And so you made me you made me cancel it at a small profit. Deer. Wow, that's interesting, McGraw. Deer's playing hardball with a union, which I personally love. They said no, I gave you my best offer, so hit the road. We'll deal with non-union workers. Car is this looks like a beautiful day trade short. And then also let's look at a call spread on this. We could do the 550s for next week. I looked at them yesterday. They were juicy. And we keep a stop, over $400. We don't need to stop that high. Yeah, but we don't care, McGraw. There's no restriction on selling call options. Emmanuel F slide 56. You need a pullback. It is a bullish daily, but you put it in a window, you need a pullback. Nikla, it's too extended. But I do like the weekly. No, do a spread then. Do a spread. But this is not tier one, Emmanuel. I mean, look, it's up 8 bars, far from the 20. MBUU. I don't know what the target is, it is a bottoming pattern, but I don't know. RCL up alarm. So we're in that, looks great. We actually have 2 trades in it. We're long stock and we're also short a put. Bitcoin down a little bit, so those related stocks are down a little bit, which is fine. We got a couple put spreads on.